Hello traders, Lance Ippolito here. Let's get to the big earnings tonight, which is Netflix. So we have Netflix here, very bullish price action. Last quarter it had good earnings, but the stock rarely moved. And then the previous quarter in July, that's when it caught everyone's attention from about 160 all the way up to 180 plus, which was a huge move. Because when you're trading options, the market makers are implying for this quarter, and for the options expiring this Friday, the weeklies, about a $17 move. How do I find that? I look at the implied volatility and I see about $17 here. You could look here at the market maker's expected move. It says 15. What I normally like to do is look at the money straddle. You can add, let's say the stock at 226, so we'll just do 227 halves. $8 for the calls, $9 for the puts. That gives us just about $17 or so, or you could go actually single and look at straddle, and then we'll look at we can look at the 227 halves, about $17 again. So now I can analyze a trade to put on for Netflix depending on where I think Netflix goes. So I personally think Netflix is going to move up on earnings. I have a bullish view on Netflix. So therefore, I could do a couple things. I could sell a bull put credit spread, like the 225, 222 and a halves, collect about $1.15 with $2.50 of risk. That's not bad. I can buy an outright call, but when you're buying outright options, remember you're also buying the high implied volatility. Or I can look at a call spread. Let's say I think Netflix can trade up to 250. I can sell the 250 calls for about $1.40, and I can buy the 240 calls, so $10 wide for about $2. So therefore, I'm risking $2 per one lot, or $200 to potentially make $800, so about a 4-to-1 risk versus reward. And I can analyze the trade. Here I go, and I can see, okay, my max loss, first thing to always look at, 200, max reward, 800. So therefore, if Netflix at expiration is above 250, which is this week, I make $800. If it's below 240, I lose $200, max loss, or the price I paid for the debit spread, and my break even will be the call I bought, 240 call plus $2, so 242. Anything above 242, I'm in the profit. Let's say Netflix closes at 248 or so, I'll make about $600 of profit on that $200 of risk. But obviously I would like it to be at 250 or above. Hope this helps, and I'll be going over a members trade and Netflix today as well.